SoFi stock dropped another 5% on Friday, rounding out a bad month for SoFi where the stock has dropped over 20%. Now, I have been bullish about SoFi since the stock was only $6, but SoFi stock hit over $18 in January for the first time in over 3 years. But the important question now is, can this rally get back on track? And is this actually another huge buy the dip opportunity? If you follow the stock, then you know just how much SoFi is growing. But for most of 2024, SoFi stock had been dropping despite the company doing better than ever and making better profits than before. Stick around to discover how you can make the most of this pivotal moment in SoFi's history. But before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 1,000 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. It's still a growth company with huge potential and still at the very early stages and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. In an announcement just a few days ago, SoFi has launched a co-brand debit program offering, enabling brands to offer debit users access to rewards typically reserved for credit card holders. Galileo is the first to bring this type of program offering to the US hospitality sector. While a co-brand credit rewards program are common, debit users have largely been left out until now. Now, this is something that I spoke about before when talking late last year about things that SoFi could do in order to help its growth. More than 90% of US adults have a debit card, and in the US alone, people spend more than $4 trillion on their debit cards each year, but they aren't getting rewarded for most of that spend. Now, the US adult population is over 340 million people. So obviously there is a huge market and huge scope for growth here. At a time when launching a co-branded card can drag on for more than a year, Galileo's program cuts that down to just a few months. Brands like those in hospitality and travel can tap Galileo's technology. This gets them to market faster so they can attract debit-focused consumers and offer them meaningful perks without changing how they spend. The program will initially focus on the hospitality and travel sectors by enabling airlines, hotels, and other brands to quickly offer loyalty-driven debit cards, boost customer engagement, and drive increased spend. Now guys, if you're following the channel, I have not been able to make as many videos recently, but I am hoping to get more videos made before the end of the month. So I'm trying to get an idea of what you guys want to see most. I know a lot of you obviously want me to make SoFi videos every few days, and I get a lot of comments asking me to focus more on penny stocks too. So obviously, I like to cover other stocks as well, such as Gorilla Technologies or Nvidia or even quantum stocks and other different technologies. So as always, I do try to give you guys what you want by creating a poll and letting everyone decide. So if you have not already done it, head over to the channel community posts and vote for what you want to see. Now, over the past few weeks, there's been a lot of talk about SoFi that has been far less positive than it was late last year. After earnings was released, a lot of people seem to have been disappointed with the company's guidance for the future, and they feel that expectations should be higher to justify the stock's continued rise. But I feel like the current drop from a high of $18.40 down to just $14.60 does provide a great opportunity again right now. So this is a great little article that is well worth a read. 3 reasons to buy SoFi stock like there's no tomorrow. So the key points listed here are: SoFi's banking success could make it a more efficient business, SoFi's technology platform is getting some big wins, and SoFi is doing a great job of building its third-party loan platform. Now, anyone that is critical of SoFi recently or feeling that the stock has become overvalued since their earnings report a few weeks ago must have forgotten just how far this company has come over the past few years, and that SoFi is still tiny compared to where it can go. Since going public in 2021, SoFi's membership base has increased from 3.4 million to more than 10 million, and it has evolved from a relatively small lender into a full-featured online bank. But SoFi is still tiny. Just for context, SoFi has roughly 1% of the deposit base of Bank of America. And remember that the US adult population is over 340 million people, so SoFi has just 10 million customers. That is less than 3% potential market penetration so far. First of all, SoFi is building a capital-light, low-risk revenue stream. SoFi makes billions of dollars in personal loans with its own capital and has recently started to build out its loan platform business, which originates loans on behalf of third parties and offers loan servicing on a third-party basis. This generates a stream of capital-light fee income for SoFi without adding to the credit risk, and it is scaling at an impressive rate. In the fourth quarter, SoFi originated $1.1 billion in third-party loan volume. The loan platform business produced $63.2 million in fee income from this, which is a portion of SoFi's revenue that could get significantly larger in the next few years. Secondly is SoFi's technology. SoFi has said that it aims to become the Amazon Web Services of fintech. In other words, it wants to provide the infrastructure for other companies' fintech needs on a wide scale, and the main way it wants to accomplish that is through its Galileo platform. In 2024, the technology platform's contribution profit grew by 34%, but this is still just the start because Galileo is having some big wins recently. First, the platform was selected by the US Treasury Department as the processor for Direct Express prepaid debit card program for federal benefits that are used by 3.4 million people. It also signed an agreement to power existing and new capabilities for a large US financial services company, and then we've already talked about Galileo has signed an agreement to power a co-branded debit card program, which is the first of its kind on SoFi's platform. Looking at Market Beat, we can see that the consensus price target for SoFi Technologies is only $12.50, while the high target for SoFi is $20. This is very skewed by some ridiculously low price targets, such as $3, which was set last year by Wedbush. But when we look at these analyst ratings, we can see that the price targets have all been increasing and the highest price targets have been set within the past month. Thirdly is that SoFi's efficiency could improve sharply, and this is a very important point. The most rapid growth within SoFi's business in recent years has been on the banking side of the business. In 2024, the number of SoFi Money customers grew by 51%, while the number of personal loans grew by about half of that rate. Now, this might not sound good, considering how the company's lending products are the key profit drivers. But this has created a more productive business structure that should allow SoFi to become far more efficient. As the financial services side of the business grows, it creates more of a natural marketing funnel for the company's loan products and third-party loan platform. Customer acquisition has been a cost that SoFi needs to improve, and the more opportunities it has to sell products to existing customers, the more efficient this process can be. Now, I've been shouting about this for the past 12 or maybe 18 months. It is SoFi's continued and growing ability to cross-sell its products that will make this company more profitable, and this is a huge opportunity. But this is not a full list of things, and there are plenty of other potential catalysts that could drive SoFi stock higher, such as that the company is just starting to scratch the surface of its potential when it comes to the credit card products. Plus, the company could also see margins expand sharply as interest rates gradually come down. But guys, what do you think? Is SoFi still a solid investment now for 2025, especially with the stock having pulled back from its January highs? Or do you think that we should expect this to drop further? Let me know your thoughts in the comments below, but always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on X and I'll catch you in the next video.